June is not the bottom. I was very clear about that. I said, I don't think June is the bottom. What I said, though, I said either the next bottom is the bottom, or it could be the one after that. Now, when we were here last summer, I said, June is not the bottom. I was very clear about that. I said, I don't think June is the bottom. What I said, though, I said either the next bottom is the bottom, or it could be the one after that. That's what I said. Either the next bottom in Q4 or the one after that. Now, we have to understand, like, why would it be the one after that? Okay, why do we even need to consider that a possibility? First of all, as an investor, you should consider all possibilities. The markets will humble everyone. I mean, they will humble everyone. They humble myself quite frequently. There's only, maybe sometimes I get a few things right in a row, but then it's only a matter of time before I get something very much wrong, and then I fall out of favor for several months again. So do consider that, right? But the reason why we should be open-minded is because there's no way to know how deep the hole is in the secondary scare. There's no way to know, right? Now, you might think you know, but no one knows. It's possible that it's a pretty shallow second scare. It's possible that it's really deep. In 2020, it was a higher low. Okay, it was a higher low. We had a low, and then we had a higher low. But in the cycle before, which many people don't remember because many people weren't even in crypto then, it was not a higher low. It was a double bottom. And on some exchanges, it was a lower low, which people conveniently decide not to talk about. This wick here, this low, 166.45. The low over here in August, 162. So technically it was a lower low, but I think to be to be a little bit realistic, let's just call it a double bottom, because there were some exchanges where it was a higher low, there were some exchanges where it was a lower low. Let's just call it a double bottom. So in one cycle, you have a double bottom. In another cycle, you have a higher low. And so the reason why I said back over here that either this is the bottom or the next one is because I can't be sure how deep the secondary scare goes. I can think that I know that a secondary scare will occur, right, which is no guarantees, but I can't possibly know how deep it could go, right? I simply cannot know. And so we just have to simply wait and see how, the yield curve stuff plays out. Normally, you would expect, at least a recession or a recession scare following an inversion of the yield curve, which we haven't even reached. But again, there's just simply no way to know how deep it could go. So I think what makes the most sense is to be open to all three possibilities. Be open to the idea of a higher low, be open to the idea of a double bottom, and be open to the idea of a lower low. If you go into it thinking you know what has to happen, then you could be very wrong. And you need to have a plan no matter what. At this point, right, we're still pretty early on. And if you look actually in 2019, what happened after Bitcoin got this 20% drop in a week, we kind of consolidated for a little bit and then rallied back up and got rejected by the 20-week SMA. What happens if now we've moved further down the risk curve where the S&P rally gets to bounce off its 20-week SMA just around 4,300 or so, and it bounces in a few weeks, right? That could lead to Bitcoin back testing the 20-week SMA just like the altcoin market did. But you're further down the risk curve. When we talk about this idea of a secondary scare, we must understand what causes it. And I said before, I think it's this seasonal correction in the S&P 500, nothing more, nothing less. One of the things we've also mentioned many, many times is how in the pre-halving year, you typically get about half green and half red. Now, so far, we've had about 5 of the first 6 months be green. I've said there's a good chance that 5 of the last 6 months will be red, just like in 2019, just like in 2011. And 2015, it was seven green months and 5 red months, but most of the first half of that was red and not green. So far we're still following 2011 and 2019 pretty closely in terms of first half of the year being mostly green, second half of the year could be mostly red. The average return of Bitcoin in July of its pre-halving year was approximately negative 4.74%. It ended up being negative 4.09%. And I said earlier, right, the average return of Bitcoin in August of the pre-halving year is negative 21.3% when you include all 3 prior pre-halving years. If you exclude 2011, which was negative 40%, almost negative 41%, which is reasonable, then it's more like a negative 11 or negative 12% drop based on the 2 prior averages. And right now it's sitting at negative 9%. A lot of times, right, 2019, when you get, and 2011, right, when the first half of the year is mostly green, the second half of the year is mostly red. And that is how we wreck both the bulls and the bears in the pre-halving year, and everyone gets sufficiently wrecked. If you're to go look at the year-to-date ROI of Bitcoin, well, we followed this one quite closely. If you're to go look at the year-to-date ROI of Bitcoin of 2023 and compare this to the average of 2015 and 2019, you will notice that it's doing a lot of what it normally does, right? Like, this is not that dissimilar from what we've normally seen. The reason that both bulls and bears get wrecked, I think, in the pre-halving year is it essentially flushes everyone out, and it leads to less speculation. Then theoretically, maybe future rallies can mostly be spot driven as opposed to via leverage trading, because people just get washed out and they simply throw in the towel. So by the time we get a real rally that can take us to new all-time highs, no one really believes it, because everyone just keep getting wiped out every week because they just over-leverage themselves, and Bitcoin punishes that. The thing that I'm sure a lot of people are wondering, why is the Bitcoin dominance down? Well, 2 things. First of all, remember that TradingViews recently added over 10 billion to total 3 to the definition. So had they not done that, the dominance would actually be over 50% right now. However, there is some element of me rationalizing in that statement, because while that may be true, the altcoin market has not capitulated on their Bitcoin pairs in this Bitcoin drop. But here's the thing. A lot of times when Bitcoin drops very quickly, the dominance can go down / sideways for a little bit. It's only after you really start to get these weekly closes below the 20-week SMA where the altcoin dread really starts to set in. So, before you judge the dominance theory because it's now back below 50%, just remember that oftentimes it takes getting those weekly closes below the 20-week SMA before altcoins really start to get hit on their Bitcoin.